through the first half of the year, 270 tons of gold purchased by the central banks. And then in July, you had 37 tons added, which was actually the largest monthly increase on record. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And in today's video, going to take a look at some of the recent central bank gold purchases, which have continued this year. We will also dig into silver and a few other noteworthy items that have come up recently, but thought it would be a good time to comment on the central bank gold purchases because they have continued this year. And in fact, through the first half of the year, 270 tons of gold purchased by the central banks. And then in July, you had 37 tons added, which was actually the largest monthly increase on record dating back to 1967. To put this in context, if you look at the 270 tons for the first half, annualize that, coming out to 540. And in 2021, you can see here 463 tons of gold added. 2020 was a slower year where only 273 tons were added, but the record going back to 2018 was 656 tons. And then in 2019, a number close to that, 650 tons. So at least annualized at the first half pace, that brings you to 540. So showing still a decent amount of gold being purchased by the central banks. Turkey has been one of the large buyers, as we can see here. Turkey purchased 9 tons in August. September number is not yet available, but that 9 tons in August brought its total purchases to 84 tons by that point. And we can see India has also been buying gold consistently for months, ramped up in July with a 13.4 ton purchase. Of course, as I have mentioned before, India has been importing a lot of silver this year. These are the figures showing the monthly amounts. That 1,800 tons was the big one that was quite large historical. As you can see, there was only one in 2008 that was even in the ballpark. That was the July number. We do have the August number for India showing over 1,000 tons of silver purchase. So India purchasing a lot of silver and gold. The central banks slowed the pace of gold purchasing back to 20 tons in August after that 37-ton number in July. So again, just in terms of looking at what some of the largest players in the gold market are doing, worth noting that central banks are continuing to add gold. For some context, here we can see that actually is a trend that changed over the last 30 years. A lot of net selling of central bank gold really until the financial crisis. And then here you see in the last 10 years or so, a fair amount of central bank gold purchasing. And this year's number is set to be somewhere in that ballpark around here, 500, maybe 600 tons of gold. We'll see how the last couple months play out, although certainly with a lot of things happening in the world right now, especially with things like the Bank of Japan intervening in the yen and the Bank of England reverting to quantitative easing to support their bond market, which we'll have a note on later, as on Monday they did have some news with what's going on there. So just something to keep in mind that even as the price of gold is down, some of the largest participants in the market still adding, and again, with what's going on, makes a lot of sense to me. So another thing worth noting is that while we've seen the price of gold and silver get pummeled in the US ever since March 8th, interesting to note that in a lot of places, gold actually doing pretty well in countries in which the currency has been going down relative to the dollar. Certainly is the case, as Laurie William points out. Of course, the UK is not the only country where the gold price has been appreciating the local currency due to the US dollar's strength. There are many others. And as we can see here on this chart, that shows a whole handful of currencies: the yen, Japanese yen, Swedish krona, British pound, euro, renminbi, Canadian dollar. And it's only the US dollar and the Brazilian real that have gold down on the 12-month period from last September 27th of 2021 to this year. So I know that maybe does not help people in the US feel much better, but just something worth noting that in a lot of the other countries where their currencies have been going down relative to the dollar as the Federal Reserve increases interest rates, gold actually up and serving its purpose in those countries. And certainly will be interesting to see how the gold market reacts in the months going forward. More interest rate hikes still priced in the US, where the Fed is moving forward with their tightening policy, although we'll see if at some point the pressure gets too much and the Fed does pivot. Certainly stress in the banking system with Credit Suisse, Deutsche Bank, and certainly, again, as I mentioned, with the UK government bond market. Do I expect the Fed to pivot tomorrow or next month? No, but I think there are circumstances out there that could change that, and we will see how that goes going forward. Although here was something interesting that came out over the weekend. U.S. Congressman introduces gold standard bill. This is Alex Mooney, who has been an advocate for gold and also a U.S. representative from West Virginia. And he has introduced what is being called the Gold Standard Restoration Act by sound money advocates, calling for the repegging of the Federal Reserve note to gold in order to address the ongoing problems of inflation, debt, and monetary system instability, which certainly we are seeing now. Upon passage, this would require the Fed to have 30 months to publicly disclose all gold holdings and transactions and have the dollar pegged to a fixed weight of gold at its then market price, with the emphasis being to do something about Washington's spending habits, the creation of thin money out of air. And the Restoration Act also talks about some of the harm the Fed has inflicted on Americans ever since the former President Nixon temporarily, somewhat longer than temporarily, longer than transitory, since he took the U.S. off the gold standard back in 1971. So I'm not sure that this is necessarily going to pass at the moment, but certainly appreciate Alex Mooney bringing attention to the issue of gold and bringing it back into the consciousness of the public as we face inflation rates of 8% or higher. And he mentions a return to gold redeemability would arrest the problem of inflation, restrain the growth of wasteful and inefficient government, and kick off an exciting new era of American prosperity. So appreciate Alex Mooney bringing that forward. Just good to have attention on gold and showing that there are some solutions, or perhaps a better way than the current system that we have. Also in the gold market, a report out last week of banks diverting gold supply from India over to China and Turkey, where we have been seeing increased premiums. Premiums in China have been about $20 to $45 over the COMEX, although $80 in Turkey, where imports have risen sharply as they're experienced quite severe inflation. So seeing here that banks will sell where they get a higher price, and that is sending gold to the Far East, something that's been going on for the past decade, perhaps even longer, and is continuing now. In terms of silver, an update on the COMEX registered stockpile, down to 40 million ounces. So we see this trend of metal coming out ever since the silver squeeze weekend, where there was about 150 million ounces in the registered stockpile and has been dwindling rather consistently, and now down to 40 million ounces. Similarly, in London at the LBMA, ever since back in mid-2021, when there was 1.18 billion ounces, we did see the latest figures out, which include September, and another drop going from August, 916 million ounces, down to 871 million ounces in September. Additionally, taking a look at the weekly transparent holdings, which include the ETFs and the COMEX, consistently seeing metal primarily leaving these funds ever since late March, when the price started declining. So metal coming out. And as my good friend Michael, who goes by Mike Say 98 on Twitter and publishes some great charts, he mentioned that September saw a record for the largest combined monthly withdrawal from COMEX and the LBMA, coming in at almost 58.5 million ounces. Total combined withdrawals in 2022 now down 332 million ounces, something that we've talked about on the show quite a bit. Although good news, and something I may have mentioned before, but we'll reiterate again, we are doing Silverfest again this year on Saturday, November 12th. And fortunately, we do now have Ronan Manley on board And after all the great articles that he's written covering this, it will be exciting to dig in with him more and see exactly what he thinks is happening, where he might think that metal is going to. So again, that will be Saturday, November 12th for Silverfest 3. And hopefully you can join us there. We'll have more information and the sign up page coming shortly, but going to have a lot of the people that you see on the show, and you'll have a chance to ask questions and interact and talk about things such as these withdrawals from the COMEX and LBMA. Also worth noting, here is the chart of the platinum stocks, a similar pattern to what we've seen in silver with metal coming out. Although, again, if you take a look back on the 10-year, you can see, again, that same pattern where a lot of metal was added in mid 2020, got to a peak, and then has been coming out pretty sharply since then. To be clear, obviously, we have had points where the inventory is lower, but did have someone in the audience mention that, so wanted to pass that along, as I know there are some platinum fans out there, especially our dear friend Neil, who is in there watching the show every day. So just a note about platinum and the warehouse supplies there. A few last articles before we wrap up. Thought it was interesting. There was a story last week, JP Morgan worried about who's going to buy all the bonds on Bloomberg. This is the treasuries as the Federal Reserve is pulling back. Bloomberg had another article today, which again addressed that same question of who is going to be buying these bonds, with Japan pulling back, China pulling back, the Fed pulling back, and perhaps not an accident that we've seen the yields on US treasuries go up, especially in the last couple of months, going up at a bit of a higher and more rapid rate. And with the US government continuing to run deficit spending, that does leave the question of who is actually going to continue buying these bonds. One of the concerns about the Fed's rate hiking policy, as well as quantitative easing at the same time. Now, as I mentioned before, did have a note about the Bank of England and the UK bond market, which was interesting. On Monday, Bank of England said it was going to double the size of its purchase of long-dated UK government bonds to 10 billion pounds a day. Had previously been 5 billion pounds a day. And now we see that the yield is spiking again, almost as high as that peak back on, looks like, September 27th, where the yields were spiking, which led to that move to reverse what had been a planned quantitative tightening program, went to quantitative easing. The yield came in a bit, yet in recent days has spiked again. And now they are planning to double the amount of bonds that the Bank of England can purchase. Although one note here is that so far investors haven't taken as much of the support as the Bank of England has offered. In the 8 auctions to date, the bank bought just 4.6 billion of the bonds, about 12% of the 40 billion pound capacity of the program. But certainly with the yields again spiking higher, seems like that issue has not been resolved. And I'm not sure that there is an easy resolution to that, especially when they are also facing the concerns of inflation. So certainly something to keep an eye on in the markets there. And one other note that I'm sure people were very excited about was to see Ben Bernanke, former Federal Reserve Chairman, win a Nobel Prize for his handling of the 2008 banking crisis. I did not see any mention of how some of the policies instituted is what led to the current situation where we do have a lot of the high inflation after years of quantitative easing and 0% interest rates, which now that the Fed is trying to undo that, they're running into all sorts of troubles in the world. But again, anyway, that is why I turn to silver, and I think many others do as well, which of course is not licensed financial advice, but just how I've chosen to respond to the situation. And with that said, before we wrap up, would like to thank First Majestic Silver. As you can see, I have my First Majestic Silver shirt on today, and would like to thank them and Keith Newmeyer for bringing us today's video. As I've mentioned before, they did have some new drill results of 19.35 grams per ton gold over 23.2 meters at Jarrett Canyon, where they're also ramping up production, aiming to get over 3,000 tons per day by the end of 2022. I know that's something they've been very excited about. Also, they believe is going to bring down their all-in cost of production and really be a big asset for the company going forward. So thank you to First Majestic for bringing us silver and gold to the world. and also for bringing this video to the world today. Going to wrap up for now, but hope you're having a great day out there, and I will see you again tomorrow.